India has overtaken China as the most populous country recently. According to OECD, a quarter of our population is less than 15 years old, which makes us a very youthful nation indeed. Share of elderly population is among the lowest and fertility rates are very high in India at this point of time. The steady upward trend in working age population is particularly noteworthy as it gives us a definitive edge over our peers and can help drive growth in the coming years. But growing workforce should also result in increase in income tax revenue for the country. Why is that not happening? Why is the income tax base so narrow, and what can be done to remedy this is what the discussion topic of today. So let's look at the main issue which India is facing, that is the low tax base and the reasons for the low tax base. The low base of income taxpayers has been debated and discussed about quite often in the past. Recently, the Finance Ministry had revealed that number of people who filed income tax returns stood at 6.8 crore in 2020-21. This means that only 4.8% of our total population filed IT returns for 2020 and 21. Of these, again, only 1.69 crore people paid tax, since 65% of the taxpayers earned less than 5 lakh. So, effectively, only 1.2% of the population pays income tax as of now. But there are reasons why the number of taxpayers is low in our country. Of the total population of 140.76 crore in 2021, according to World Bank, only 95 crore people are in the age group of 18 to 64 years. Now, not all those in the working age are employed. Many women, for instance, are homemakers or caregivers and may not be in the working cohort. The worker population ratio of India then is 44.5%, which means that only 42 crore people could be employed in some way or the other in India. Further, a dominant portion of India's workforce is employed in agriculture, and agri income is exempt under income tax. This results in 45.6% of agri workers not filing tax returns. So only 23 crore of the workers in the non-agri segment are liable to pay tax. Beside this, the tax instance arises only if the income is above a certain threshold. If we account for people earning under 5 lakh per annum, that is likely to whittle down the taxpayer base further. 67% of Indian households had annual income under 6 lakh rupees in 2021. This reduces potential income tax payers to 7.6 crore. Given these factors, the current run rate of IT return filing between 6.5 and 7.5 crore is not low. But how to harness the increasing working age population and take this number higher is what the thrust point on which the policymakers needs to focus their attention. So, how to increase the tax base? For that, the thoughts are as follows. A low-hanging fruit is the agricultural income, and many have also been advising the government to bring it into the tax net. But this happens to be a political hot potato, and action on that front is unlikely. There are, however, two other means through which the number of income tax return filers can be increased. One, through increasing the formalization of the economy, as 90.7% of employed are in the informal sector. Besides agriculture, some sectors such as construction, trade, restaurants, communication and other services too have over 3/4 of the entities operating in the informal sector. Bringing such businesses into the formal sector could help direct tax collection. This can be done with the help from the GST system also. One of the objectives of the GST regime in its original form was to nudge those in the unorganized sector to shift to the formal sector and file GST returns in order to avail input tax credits or to continue supplying to larger buyers. But leeway provided in the initial phase, such as doing away with invoice matching, dropping reverse charge mechanism, etc., have diluted this objective. With the GST system now having settled down, implementation of these self-policing mechanism rigorously could help increase the formal economy to substantial extent. Collecting tax at source for purchase of certain goods and services is another way to identify those who earn a tidy sum every year but are not paying any taxes. As of now, TCS is collected for high-value goods such as expensive motor vehicles, gold, jewelry, or overseas remittances. The ambit of TCS can also be expanded to consumer durables, domestic luxury travel, stays in expensive hotels, etc. This can help identify those operating in the informal sector and earning high income yet evading tax. While this could hit the honest taxpayers, they can reclaim the tax in their annual returns based on the Form 26AS. So I feel in a modest way, if we implement these measures, if we formalize the informal economy to substantial extent and bring the informal economy into the tax net of the formal economy, then we may have wider tax base and also increased number of returns as such. Hope the information is insightful. Thank you very much.